Hello and welcome to this special broadcast organized on the sidelines of the Atlantic Dialogues Conference by the Policy Center for the New South. Today, I am delighted to be joined by two distinguished experts in the field of global finance to discuss the role of the Global South in the reimagining of the new financial architecture. I am joined today by Dr. Ferid Belhaj, who is a former Vice President of the World Bank to the Middle East and North Africa, and Dr. Ahmed Masoud, who is President Emeritus of the Center for Global Development. Thank you so much for accepting the invitation today. I am happy to be joined by you, both of you today.
Thank you.
Thank you.
You're welcome. I want to start to understand the evolving role of the international global financial institutions like the World Bank, the IMF, and the multilateral organizations in the global financial order and how they are evolving to tackle the pressing issues we're facing today, especially when it comes to meeting the Sustainable Development Goals. And I want to ask you first, given the global shift that we are witnessing, what reforms do you believe are most urgently needed in the current financial architecture today to tackle these challenges?
Yeah.
We can start with you, sir.
Yes, let's look at the world and the way the world is evolving. We are looking at new crises coming. Whether it is climate, whether it is conflict, unfortunately multiplying all over the world, whether it is also the financial sector that is being under strain in a number of places around the world. So our institutions have evolved in order to capture and catch those new phenomena. I must say that they have evolved very slowly. So we've always been kind of behind the curve in that. When you look at the global financial crisis in 2008, we were slightly, reacting to it. We did react to it. We did whatever we could do. The World Bank, anyway, multiplied its capacity to finance and to come to the rescue of a number of countries of what we did not call at the time the New South. But when it comes to conflict and tensions around the world, we did the same. We did not have in our programs to tackle conflicts, even though the World Bank, IBRD, was born on the ashes, in a way, of Second World War, and we were there to rebuild, reconstruct, and develop. But in a way, we kind of abandoned that kind of an agenda until a few years ago. And then we started engaging with refugees, for instance, engaging with conflict in Yemen, when it comes to the Middle East and North Africa anyway, and other places. So we have evolved. Same thing when it comes to climate. It wasn't an issue a few years back. Now it is an issue. It is really in our face. So we have evolved. We have kind of developed new ways and structures. Now you are asking, what more can we do? Because that evolution was articulated within a governance system that frankly did not jive with the realities on the ground. So we had to change. We moved just a bit, in my view, on the fringes of what should be done, but there is more to be done, notably in the governance of the World Bank and the IMF. We cannot just be content with adding 1 or 2 seats around the board of directors for Africa. We need to be, in my view, more visionary and look at how we can, bring, all of those doubts, question marks that the New South have on the relevance of our institutions. We need to bring them back home. And that's not an easy feat because, not everybody sees the need to redraw the canvas of governance of the institutions the same way. So in my view, as we move forward, and if we want to keep for these two institutions at least, plus the WTO actually and others, their relevance, their effectiveness, their credibility, and their legitimacy, we need really to put our heads together and engage in a structural governance of those institutions.
You have mentioned conflict areas and new economic realities, and this is what actually pushed these institutions to put new frameworks to work for new goals and sustainable development goals. Do you share the same point said by Sir Dr. Ferid?
I agree with pretty much everything that Ferid has said. Let me just add a couple of points. First thing I would say is, yes, they have evolved, but these institutions are big machines. They're like supertankers, and supertankers change direction slowly. So you have to keep sustaining the effort, keep pushing to make that change. So they haven't quite got to where they need to. Second thing I would say is that if you compare their size, how much money they can put through, I'm talking particularly of the development banks, the World Bank, the regional development banks, it's a fraction of what is needed to actually help countries deal with the challenges that Ferid talked about. I would also add the fact that increasingly we live in an environment where countries are going to be subject to more frequent shocks, which are unanticipated, which can cause them to be derailed, and so they have to come back. So these institutions have to become quicker at responding. To get to that scale of response, to have the sense of urgency and rapidity, requires more than a gradual shift. And that's where the governance problem that Ferid referred to actually interacts with the operational problem. Because under the current governance structures, the policies of these institutions are largely driven by the rich countries, who are the largest shareholders and who provide the creditor base for them. So they're a very important part of the picture. So far, although they recognize the need for change, they have not been as forthcoming with providing the financial support, the guarantees at the scale that would enable these institutions to play the role that we want them to play. What we have asked them to do instead is to say, use your own balance sheet more effectively. And there was scope to do that. They're doing that. Maybe they can do a little more of it. But they will not be able to reach the scale they need without some infusion of additional financial support from the richest countries. And it's a great incentive. I mean, if you think about the multilateral development bank model is probably one of the best models for transforming relatively small amounts of budget capital into large amounts of long-term development finance. The World Bank, for example, in its 80-year history, has received a total of some $20 to $23 billion of real budgetary money from its shareholders. It has transformed that into over $800 billion of long-term loans that it has made for development projects. There's no other mechanism that we have that could do this kind of thing. So I think right direction, not fast enough, not urgent enough, and not enough sense of scale.
You have mentioned something important, which is the flexibility of the governance, so that we can predict the unpredictable, and especially when it comes to global crises, and how these institutions can rapidly and proactively respond to these challenges that could be sometimes unpredictable, like the COVID-19, for example, or even areas with the emergent conflicts. You have mentioned also the necessity for advanced economies and rich countries to add more resources, but not only, but they have to be used in an effective way so they can meet sustainable development goals on the long term, so especially for the countries that need those funds the most. And this leads me to the second question about the sustainable finance, and it becomes an increasing priority. What role do financial institutions and policymakers play in ensuring that capital flows align with the achievement of the SDGs, particularly in emerging and development markets?
Look, let me just say two very small things about it, and they're a bit contradictory. When you say sustainable finance, one part of it is, of course, official finance that comes from these institutions, from bilateral institutions, but potentially a much larger volume of finance can come from private capital flows, which run into many multiples of whatever we can ever mobilize from the public sector to support development, to support investments. But private finance will go where it is profitable. Private finance is not there to provide development support unless there is a return that the shareholders of that or the owners of that capital can get. One thing the multilateral system, the development banks can do, is to help countries put in place the business climate that makes it more attractive for private finance to come in because they see less risk associated with it. A big deterrent of private money coming into developing countries, particularly in Africa, is a perception of risk that is very high. So they require a very high return to be able to compensate for the risk. Now, you can actually show that the perception of risk is worse than the reality of risk. That, in fact, the returns on infrastructure projects are very high in Africa, that the risk of default is very low, but that is not how investors see it. So the official agencies, like the World Bank, like the regional banks, can play a role in helping to bridge that gap between the perception of risk and the reality of risk, also try to reduce the risk through specific measures of risk mitigation. That's something that they have been asked to do for a while. It's not something that the official financial institutions do very well. Their track record on mobilizing private capital has not been great. Right now, they're all making an effort to say, yes, we will do better. I hope they succeed.
In that sense, there is a debate about the institutions who do actually the risk assessment for countries. Do you have something to say about those institutions? Do we need, for example, an assessment for risks, an institution that comes from the Global South, for example? Do you have an insight about this?
Look, I'll just say one thing, which is I think the institute, you can create another institution, right? They will produce an assessment of risk. I can write a report saying an assessment of risk. But the question is, are the people who are putting the money in, are they going to rely on that assessment or on the assessment of the credit rating agency? So I think a more productive route in the near term is to engage with the credit rating agencies, show them the data. It's only recently that some of the data on the default rates, on the rates of return of investments that the multilateral institutions have made in the developing countries, that data is being made more publicly available. Because I think that kind of data, the information, will demonstrate to the credit rating agencies they need to rethink a little bit their assessment of risks. Sometimes also you have to say, look, the risks are high because there is policy unpredictability, because there is uncertainty. So what countries do themselves is ultimately going to be a big determinant of how the investor perceive risk in that country.
Do you have something to add regarding this?
Three quick points.
Go ahead.
The issue of de-risking. I think we have three areas of de-risking. One is what Masood was talking about. Two of them is what Masood was talking about. One is de-risking, meaning for, let's say, the World Bank or others, kind of to put some money on the table, first loss, some guarantees, to help the private entrepreneur or the private investor to come in with some kind of buffer. That is feasible. It is still a bit questionable in terms of using public money for private profit, but then again, the overall goal is a lofty one. So this is one. The second part of de-risking, also mentioned by Masood, is the issue of a tight and clear and precise analysis of the business climate in a particular country, or in particular region, by the way. That is important. And, we had something called doing business. Now it's called differently. It's important to take a look at that. So this is kind of the, coming from the bank, looking at the country. But there's also a lot of work that we have done at the bank to help the countries improve their business climate, attractability, whether it is in legal and judicial reform, whether it is in the social, in the financial sector, etc. There's a lot to be done there. It's policy driven and policy reform. Sometimes people kind of take it lightly, but I think this is very important to the core of what we should be doing. It's not instant coffee because it takes time for these things to gel, but it's because it takes time that we need to start the day before yesterday. The third point I'd like to make is that we are very badly equipped to predict risk. And in particular, when it comes to pandemics, of course, it's very difficult. How can you have predicted, COVID? But if we are well equipped, we can predict that in a particular country or in a particular region, things may turn bad. I'll give you one example. In 2007, 2008, around the world, but in particular in the Middle East region, there was a drought, a very tough drought, notably around Iraq, Syria. What happened then? Population moved from the rural areas, flocking into the urban and peri-urban areas, putting a lot of pressure on the public services, a lot of pressure on the on the government. And that drove discontent because the government could not respond, and there was the clash, and then the start of the so-called Syria civil war. I would suggest, then again, this is the international community that should talk to each other. We have, institutions, FAO and others, who can see these things, who can analyze these things, who can talk to other institutions like, say, the World Bank or the IMF, etc., to kind of alert of what's going on. We could have been involved in Syria at the time, way upstream, before the whole thing becomes what it has become. So what happened? A drought, unrest, refugees going not only on Lebanon and Jordan and Turkey, but flocking into Europe, provoking all of that turmoil in Europe with the rise of the extreme right, and on and on. So the point is, if we were better equipped, to sense what is happening in our regions, what's happening now in Syria. Of course, when Hezbollah got whacked and Iran got weakened, one could have kind of figured that those who were helping the Assad regime to stay in power, would not be able to do the same thing. Plus Russia being involved elsewhere, there were some chances that Assad would be in trouble. Well, I'm not saying that we should do something immediately, but the point is that we need to have those early warning systems in our institutions so that we can help.
Let me add one footnote, if I may, to what Ferid has said. What that demonstrates to me is that the international system that was designed over the last 70 years, operates in a world of silos. So you have peacekeepers, you have the FAO, WHO, international development banks, IMF, all operating in their own lane. Historically, it worked reasonably well in times of peace and stability. But what is more and more evident is that there is a lot to be learned by talking across the system, because that's how you would develop this early warning, exactly. You would develop this view. But our systems are not organized to do it. And I think one of the big challenges going forward is that problems have become intersectoral, connected across. They're also not country by country. They're cross-country problems. Pandemic issue is not, you can't solve the pandemic problem by saying, I'm going to approach each country and discuss with them how to deal with pandemic. You have to deal with the prevention across. And so we have to change the machinery, first talking much more across institutions. Secondly, thinking much more on how to respond to problems that don't respect borders. Mm-hmm. Climate is the second big problem. The way the multilateral development banks are organized is to have country by country by country programs. But if you want to do climate mitigation, you need to think broadly, where can I deploy money in emerging markets that is going to have the maximum impact on trying to reduce the trajectory of future emissions going forward? That's a different way of thinking. And the boards of these institutions, where the countries that own them are represented, are a little bit, how should I put it, conservative at having too much change, having risk. They're very risk averse. The world is more risky. These institutions were created to be in the front line of dealing with risk. If they are risk averse, who is going to take the risk?
Yeah. And if I may, talking about the boards, we have more or less the same countries represented around the boards of the World Bank, African Development Bank, Asian Development Bank. give or take, more or less the same countries. When you see how those institutions interact with specific issues, well, it's different. So basically, the same country has a policy in Washington, a policy in Manila, and a policy in Abidjan, which is also another issue related to how this is happening. This is one. Add to it the complexity of the UN, where the UN generally, countries are represented by their foreign affairs ministries. And it is a tradition that foreign affairs and finance don't necessarily love each other. So you have also that kind of very awkward scratching within the countries, and that of course reverberates when it comes to the broader agenda and how to approach those agendas.
You've mentioned something very important that we need to remember is the ability of these institutions to provide technical assistance for countries, for example, to enhance the business climate in countries. And the Doing Business Report were very important to give some policy recommendations in terms of business creation, market contestability, the presence of SOEs in the market, and how we can integrate, for example, more people from the informal economy to the formal economy, so that we can ensure that we have an inclusive and sustainable growth. And technical assistance is very important. You have mentioned also the necessity to have more cohesion between the different institutions that used to be working in silo and in a unique way in each specific field, in food security, for example, for the FAO, and others, labor for the ILO, and so on. This leads me to my last question. It would be about the new technological advancement and artificial intelligence, the new changes that we are all witnessing so far. And so with the rise, for example, with the digital finance, how do you see the role of traditional financial institutions evolving? What governance frameworks would be essential to ensure that technological advancements contribute to rather than undermine financial stability and inclusivity? You can answer, sir.
Let me start, and I'm sure Ferid will want to add to it. Look, I think there are basically three kinds of things that will be impacted. First, it's very clear that the improvements in technology, we talk a lot about AI, but there are other improvements in technology that are happening right now in biosciences, in medicine, in agriculture, and all of these are going to increase the speed and effectiveness with which we can deliver development outcomes. And one of the roles of the international financial institutions, the development institutions, is to be the channel for ensuring that those improvements get transmitted to the countries, all the countries that could benefit, not just to a few. Because the history is that the gap between the invention of a new technology and the adoption of that technology across the world can be very large. The indoor toilet, the regular toilet, was invented 400 years ago, right? But it's still many parts of the world, people don't have access to it. So invention is just the beginning of the chain. And one of the roles of these institutions is to shorten that chain. That's one thing. Second thing that's very important is that many countries are worried about what AI and data and digitalization, data governance, how should they handle it? If you're a big country, you can set the rules. The European Union, you can say this is the rules by which data governance needs to be managed if you're going to operate in the European Union. If you're the US, you can say this is the rules. If you're India, you can probably say these are the rules if you want to operate here, or Brazil. But many countries, if they say these are the rules and the rules are different from what others have, the companies will just say, well, I'm sorry, we're going to walk away. Now, what should they do? Should they just say, okay, we have no rules? Should they have some mechanism? Should data be offshored? So they're looking for help on governance of data. And that also is an important area of support that these institutions can provide. And the third thing I would say is that, this is the one that the institutions come to last, is that these new technologies, particularly AI, can also change the way these institutions operate themselves. And it's not just the back office function. I'm not just talking about like what we can do our, back office accounting, et cetera, different. No, their substantive work has to start by integrating the best that comes from AI to improve the quality and effectiveness of their own analysis and of what they put out in terms of the advice that they give to countries. So I'd like to see 5 years from now a report, an independent report on how effectively are they using these technologies in their own operations.
Yeah, but an example and a couple of comments. When we had the whole thing happening in Syria a few years back, we did what we call rapid damage and needs assessment. We couldn't set foot there. The whole thing was done through satellite imagery. What we are looking at right now in Libya, there was the flood in Derna, a year and a half ago. We did exactly the same thing. We identified the regions or the parts of the region that were the most affected, and we even were able to put some, a sticker price on that. That was also through satellite imagery, enhanced by AI. So we are doing things, and frankly, the world is huge there. So we will do way more. But they have two points. One is the control of the state on innovation. A few years back, everybody was jumping up and down because in Tunisia, they adopted the Startup Act. It was kind of a law framing startup activities. And I was one of the very few saying, this is totally crazy. How can you frame legally an industry that is evolving so fast that by the time that law was passed, it was already obsolete? And there was a discussion. Imagine that law was kind of limiting the number of startups per year to 200. Why not 190? Why not 201? So this is where the states is still very insecure. So they want to keep this new technology under wraps. The European Union, as Masoud mentioned, just adopted a framework to regulate AI because it was running very fast and becoming, a bit unhinged. My question is, I'm wondering, how much can you frame, regulate, let alone, God forbid, legiferate over AI? So this is, one question. But at the same time, and this is where the tension lies, you look at crypto, and frankly, you don't know where this thing is going. Now, Donald Trump is kind of opening the doors. I don't know whether it's the door of heaven or of hell to crypto in the US and possibly around the world. Where are we going with that? Is there any central bank that can regulate this? Is it for a central bank to regulate crypto? It's a big question mark, and it is a debate, and we are just seeing the very, very first kind of glimpse of this thing. So the whole discussion about AI, we are really, really looking at a very small hole in the wall there, and God knows what is behind.
And just one footnote to that, which is cybercrime. We had a session here at the Atlantic Dialogue yesterday on cybercrime. And my takeaway from it is that the potential of being hit by cybercrime is enormous. And it's happening in the tens of thousands of millions of attacks that are happening all the time. But the vast majority of developing countries not prepared at all at the moment in terms of having even the basics in place to be able to respond. And I think the only reason why they're not getting as attacked is because at the moment there are other more lucrative targets that are sitting there. But it's only a question of time before they get hit. So I would say one bit of, and that, maybe this is an issue where, the international development agencies or the financial institutions or the BIS needs to be much more proactively supporting countries to prepare themselves to be resilient in terms of at least having good practice on dealing with cybercrime. And frankly, I would be very worried today, especially if you think about the Internet of Things. I mean, you might be protecting your critical infrastructure, but the microwave sitting in your kitchen could be a source of transmitting information and data and could be an instrument for cybercrime for you. So think hard about how we can help countries to deal with that.
Thank you both for those insightful discussions and examples. I would like to thank you for your presence with us today. Dear audience, thank you very much for following us today in this special broadcast organized by the Policy Center for the New South on the sidelines of the Atlantic Dialogues. Stay tuned for more episodes. Thank you.
Thank you.